you have reached this point in the journey, congratulations to you. You've come so far, and you've reached one of the major points of this whole series, where it's this now is going to um, help shaping clear everything for you, because basically I personally, this is the main thing I do. There's nothing hidden. I'm not gatekeeping anything from you guys. So if you know how to add up everything I've taught you, plus this, using this, then your journey and your distance with profitability is just a matter of practice from you, because um there's no extra thing that like I think you need to know or bother yourself with. If you practice and practice and practice all we've said so far from lesson, I think three, lesson three up until now. So with that being said, I bring you the psychological level model, and this is the level. This is the um, model. This is my system I use. We are getting there. So, um, what are psychological levels to begin with? Psychological levels, as they sound, around the numbers. Examples I'm going to be showing you, but then there are numbers that institutions use, these big institutions use to trade, because they hardly look at, yeah, they do, but they don't really care about what's happening on the charts. Like, it's retail traders like me and you that like care about inch of everything happening on the charts. But as for institutional traders, the guys that play on the big leagues, they don't even care about that. So um, they use round numbers to make decisions. Psychological levels in the human mind, it's easier for you to remember. Let me give you an example, and I'm gonna be using $100 is a psychological level as regards 997.892 or $86.379, right? Just like the way you see, look at the scale, 4,637.25. You see, that's random, but then 1,000 is a psychological level, 2,000 is a major psychological level, 1,500 is a major psychological level, 2,500, 3,000, like that, 4,000 of your normal banknotes that you normally use, either dollar or naira, as the case may be. So those round numbers are what we call psychological, major psychological levels rather, because we've got mini psychological levels in between there, which we are going to be looking at. So you would notice that major reactions that happen in the market happen from these major psychological levels. So that's why I tell you I am giving you like the best, like the secret of the whole thing, the whole game of trading. This is the most ancient ways before the chart came in play. And it was giving you guys a history of candlesticks. I told you guys before, people do a technical analysis and trade without candlesticks. But then it was when Steve Nissen came that he made it popular to the Western world. So question is, trading has been there since the 16th century, like way back. And then they were not technologies like we do have. They didn't have phones, they didn't have devices where they do analysis, but they still traded. So question I want you to ask yourself, how do you think they did trade, before now? I told you guys they would have to go to the trading floor like an office, you would have to meet a cashier, book your level, they will give you a ticket. Is that ticket you used to pay? And that was how trades were being taken before then. So you can't trade from the comfort of your home. You have to go to a trading floor. You have to see quotation. Usually, when they go to trading floors, this is just what they see on the quotation, right? Let me show you a literal example. This is kind of like looking fancy. If we enter trading MetaTrader 5, you would see it. Uh, uh, yeah, I don't know how to navigate, but then I mean, how to slant is quotes. Yeah, this is what I was trying to show you. So this is the only thing they see. This price is here, the way it operates here. So there's a board. So you would observe with me, if you've been to a bank, you notice, you see different exchange rates moving, like moving. So that's how they traded before they didn't have access to charts like we do right now. So they used psychological levels to make trading decisions in addition with other factors like the fundamentals before now. So this topic we are treating about psychological levels is an ancient and very very ancient model of trading, which is what me I use personally, and that's what I'm saying. If you understand this, then your journey to profitability is not far, except your human inefficiencies that's gonna be coming in the way. Else you are good. You don't need anything extra. So let's head on. Let me show you guys an example now that I've given you guys background of how psychological levels came about, what it's being used, who uses it, right? So psychological levels serve as dynamic support and resistance, just like the way trend line serves as dynamic support and resistance. This is a major support and resistance. So let's head on to the chart. For example, if you enter into any chart, example, we're on a daily time frame and you want to identify your nearest psychological level, what you do is pick your tool, come here, and what can we see right here? We are, you could see them, you could see 4,500, it's even highlighted 4,000, you would see 5,000, you see 5,500, you see 6,000, you see 6,500, you see 7,000. So those are some major psychological level, but in between them we will mini psychological level. So there's the major one that everybody knows, but then me, based on my own practice and back testing, I still went on ahead to refine them, which I'm going to be showing you everything here in this video. So watch tight, get your pens ready, like, subscribe, share to someone you think this is going to be helpful to. So we're going to start with 4,000, and then whilst we are marking this level, I want you to notice and observe reactions that happen around these numbers. Then you understand that every other thing that happens is hinged on these numbers. So that's why it's a very premium knowledge I'm giving you. So you see, without even doing anything, we've been using this guy as example throughout this lesson, but then if you know this guy is a very strong support, why it's not just happening anyhow. So when you see us make decisions in the market, we don't just make decisions like just like that. So after 4,000, what's the next psychological level? 4,100. That's the next major one. That's 8,000 pip in between each other. And if we move further, after 4,100, what do you go next? You go 4,200. Right? So any chart you find yourself, just 1,000 increments, 100 increment, 4,200 and 4,300. As we mark this, be noticing how price reacts around these levels. So I'm giving you guys gold. This is my secret I'm giving you. It looks simple, but it simplifies everything for you and it helps you, do. So let's head on. I'm gonna identify these ones at the top as resistance. Remember, here at the top, resistance, and the ones below support. So let's drill down to our 4 hour. So like that, I keep adding 4,300, 4,400, 4,400. Let's run it up to 4,500. But then you could see it's already even highlighted automatically. So can you see a pattern? Let's come from here. You'll notice that every major move that happened around these zones. 4,500. Let's start from there. Right? 4,500. So this simplifies everything for you as a trader once we get on the chart. So you see, can you see? Do you think these things that happen in the chart, they just happen? They don't just happen. There are prices, invincible numbers. Well, now it will be invincible to you if you're watching this video. So you notice from 4,500, this was a major zone, was a major support level that price was holding for a very long time. But then, since when it broke down 4,500 level, tested it, look at the major drop that happened. So where next was able to stop this price? 4,300, and you see it stopped it, and then major drop happened. Where's the next guy that was able to stop it? 4,100. Look at the move that came around that level. After it came, still broke that level. What was the price level? Holding price right now, 4,000 is the major guy that's making price range above here, and 4,200 is the major guy resisting price right here. Can you see everything adding up? But then this from bigger time frame. If we go to 1 hour, you would notice that like the distance between 4,100 and 4,000 is wide. So what do? You could work with this if you don't want too much noise, but in between this guy, if I measure this guy from here to here, you see it's 1,000 people. So if I measure these two, if I divide it into two, you'll be seeing I'll be arriving at 4,050, right? 4,050. And then this guy, I would love to turn into blue. So in between them, you'll notice the half of it, 500, 500 in between. So these are the major psychological levels that everybody knows, and the general one, even you check on YouTube, that's what you're gonna be finding. And look at how price has been reacting. So everything that happens on this chart happens around these levels, be it any chart, especially on gold, right? Because it's a commodity that people trade in real time. So people don't have time to be calling, like example now, yeah, 40 16.6 or 40 21.18, right? So human mind is easy for you to remember 4,000. It's easy for you to remember 4,050. It's easier for you to remember 4,100. So that's why it's easy for these institutional guys, and that's what they use to make decisions, and hence why you see these major moves happening. So then I went on, this is my own personality, I didn't see it anywhere, like I just went. So since I use lower time frame, like 15 minutes, sometimes 5 minutes when I want to scalp, this range is too wide for you. So what do? I carry my tool again, and I tell you these are the standard one, 40, 50 days. But then personally, on a personal level, I went on to refine it and say, okay, if I can divide between here and here, it so therefore means I can divide between here and here. And if I divide between 40, 50, and 4,000, I'll be arriving at 40, 25. 25 will be half of this guy. Do you understand me? 40, 25. It will be half in between this guy. So I went on further to say, okay, fine. Now, example, look at what's happening. Look at how price was resisting. There was just an invisible thing that was holding price. It wasn't just random, it was this number. Can you see how powerful it is? It wasn't when price broke this level, tested it. It wasn't just happening. It's this invincible number. Look at what happened, right? So on your own, I want you to go after this. You go and identify on any chart and observe how price reacts with that. You will know how powerful this thing that I'm sharing with you is. What happened? Price came all the way down from this up. All of a sudden it switched. What do you think switched it? These numbers, right? So in between this guy and this guy, if I share it, or only thing I gotta do, I'll just be making increments of 25. That way it will give me the exact thing I need. So between this guy and this guy, if I share it, I should be having 40, 75. That's the way I had below 40, 75. Can you see? Look at what's happening around that number. So for each of these numbers, you'll notice things happening around them. So easy for you if you just identify your market structure, identify who is in charge. You just come and trade your thing and repeat the same process over and over again. Because if you join this in, all you need is just market structure and this and confirmation and good. It's simple. This is the simplest model I use to make money from the market. So then I now said, okay, if I can share in between these guys, so therefore means I can share between these two guys. So it now depends on you, the time frame that works for you. And if I divide half between 4,000 and 25, I'll be having 12.5. Because if you 12.5 plus 12.5, it makes 25, right? And if I add another 12.5 on 25, I'll be having 37.5, right? So that was how these little ones are the little levels, right? And if I want to be even, I can still divide this. I'll be having 6.25, but then that will be too much. So 12.5, I add another 12.5, I'll have 25. If I add another 12.5, I'll be having 37.5 in between these guys. 37.5. So if I add another 12.5, I'll be having 50. If I add another 12.5 in between this guy, I'll be having 62.5. 62.5. Can you see? If I add another 12.5 to 62.5, I'll be having 75. 75. You add another 12.5, I'll be having 87.5. So this is what I use all day from, I discovered it some years back and it's been working like magic, bro. So don't allow anybody tell you one thing. So for every, you use these guys as dynamic support and resistance, but then if you don't want to bother yourself about going in detail like this, that's why I marked the major ones. Let me bold in. So anyone you see bold is a major psychological level. The ones you see small are the mini psychological levels in between. So this can get messy for you. So if you don't want to bother, you just use the basic one that like general one that everybody uses. So when we drill down, let's go to 15 minutes. Let's observe and see how price has been reacting around these levels. You'll notice that yeah, most of the things happening have to do with these lines. So we trade on these lines and you keep climbing, see. So then we keep climbing. If it's too noisy for you, you reduce. And then once price crosses above 100, it's a new story. The conversation now becomes between 100 and 200. Once price climbs this level, conversation becomes between 200 and 300 range. That's all you need to know. Once price crosses this level, the conversation is between this guy. Anything that happens below, none of your business. Once price crosses below this guy, it's a conversation between 400 and 500. Like that. So if price is coming and price breaks this level, there is a conversation between this range. So you just be looking. Yours is just to position well, look forward to take off flight, and you're good. Right, so that's why this model is simple and it's easy to understand for anyone, and you'll be able to start having confidence in placing your stake trade ideas. So this is the psychological level. Let's go on to another chart. But then you don't just use them just like that. You have to include your market structure, know the comfort overall. Because market structure is what's going to tell you who is in charge, because this guy are not going to do you any good if you are going against the trend. So you need to know where price is going so you are able to use this guy and position well. Either to use them to protect your stop loss or to use them to get sniper entries. So most times if you go to my Telegram and check my entries, you will see that I get entries as sniper entries. Why do you think that happens? It's because of these psychological levels. There's no other magic. It's because of this number when you see me take a trade. So usually my model is just simple. So I just pick a mini range and then I use an average of 170 pip stop loss to so even my stop loss placement is systematic. I don't just place my stop loss anyhow. Even my entry is systematic. So this is the system I use. 170 pip stop loss, some space below the previous psychological level, and you're good. So my entries are systematic, my stop loss is systematic, right? So it's not that like anything I do on the charts is random. It's based off the system that I'm showing you. So if you know how to use them, well, you're good. You don't gotta pay for no, you know. So I'm telling you the plain truth. I'm not hiding anything from you. So just notice how price reacts that level. So now that I've established where direction of the market is, I would have been looking for positions to buy, and when I see reactions, so that's how I use them. So let's go to another pair and identify the psychological levels. So like for this guy, can you see? Let me drill down to 15 minutes before I leave this guy. Notice, you see how prices are reacting. Do you see any resistances? Do you see? It has to do with this line. If you go 5 minutes, you even see it's worse. That's where you enjoy it. That's where you would, enjoy it. So it's in 5 minutes. You just use this range, from this range to this range, you're in profit. Came here, came here like you wanted to break, but it didn't break. So that's psychological levels and how you can use them as dynamic resistance and support. So they keep switching. All you need to do is just keep following price and making what you deserve to make. So yeah, let's pick another random chart. Let's pick, say, example, Bitcoin. Let's pick Bitcoin and see if we can identify these psychological levels on it. It works on any pair. Yeah. So for example, right now, starting off price is at 74,000. So I can easily see that price is approaching 64,500. So that's where price is right now. And then below 64,500 will be 64. 64,000. And then if I go above that, it will be 65,000. If I add 500 to it, 65,000. And you see, so just like the way we did from 64 to 65,000, it's about 1,000 pip. Then if you divide it, about 1,000 pip. So all you need to do, even you don't know the specific number, say I don't even know, I'll just pick from here the nearest whole number where price is where you pick the nearest whole number. And once you pick that nearest whole number, just do 1,000 pip from it, you will get the next psychological level. Here is 500. If I add 1,000, I should be having 65,500. Right? So 65,500. Yeah. So can you see what's happening? Can you see what's happening around this level? 65,000. Can you see even this drop that happened? The data is mistake. So this thing I'm sharing with you, this line, people pay a whole lot of money for it, but then you guys, you're my guys, I'm not gonna keep anything from you. I want you to be able to learn. I want you, let's eat together. 65,500, it will leave us at 66,000. And then if we go, you notice things that happens with the consent of these numbers. And what's below 64,000 is 63,500. So I hope you are catching the pattern I'm using to map these prices. Just use your normal currency. It's easy for you to call 1,000 naira $1,000, $100, 100 naira, 200 naira, 300 naira, or dollar, or whatever currency it is for you. So yeah, but then this will be only useful to you when you consider market structure. Else you are going to suffer for it. Right? So what's the market structure saying? And then you align with it with whatever the market is telling you. So this major point of resistance was around 67,000. Right? But then that's by the way. So same concept, I wanna go in, divide between these two, all I gotta do is 63,500. So I think in between there it will be 63,750. Yeah, it will be 63,750. Yeah, and if I want to be dividing between here, it will be 64,250. So are you seeing how I am? 64,250. So it depends on the time frame that this works for you. You know, there's no holy grail. It's just something that gives you an edge. 64,500 and this it will be 64,750. 64,750. So when we drill down, you would see what's happening around these prices, and you see even at 750, this was a sniper. Wanted to retest, broke another high, and now we'll be looking for higher highs and lows. Be looking for another low, whether it will take out this low or not, so that we will know. Remember, I told you market structure start a high, mini, a high, a high. This is how price moves, right? Except in rare occasions where there are high impact events that market moves like this. So anytime when you see market just move straight up, just know there's a problem, or there's a major market event that happens. Else it happens in process. So yeah, when you drill down to 15 minutes, you see more clearly. That's when you appreciate us dividing in between these guys. See what happened. So this guy now is a current major support zone. This zone like this is a support zone. So if I am to be depending, this is where the buy zone is. So if I am to be looking for buy opportunities, I'll be waiting for price to come around these levels if I like. Simple and short. So let's look on to another thing in the market. So let's say maybe you want to check for Forex. Let's go. Let's use GBP USD. Yeah. So this GBP is paired with US dollar. So when you see market coming down, it means the US dollar is gaining strength. When you see it going up, it means USD is losing strength against GBP. Example, look at them. 133 230. So these guys are a little bit confusing, but then we'll figure it out. All you need to do is 1.35,000. 1.35,000. 35. So all you need to do is just ignore that 1.35,000. You draw from here and you go for a pro. These guys are sky roller with this 35,000. Next gonna be having is 1.34 thousand. So next is 1.33 thousand. 33. So are you seeing how I'm identifying? So it goes to any chart. You look at this number, look at my prices, mark the nearest number you can round up. So if we go down, you see that it's wide because what we did was from daily. So what is your responsibility now that you're here? You pick your ruler, you come, and what you do in between, what you'll be having will be around 33,500. Right? 33,500. So notice if I come in between here, it will be 34,500. 34,500. So I hope you are seeing how I'm being able to build this. It will even make more sense to you when I drill down to say maybe 1 hour. Then you start seeing things clearly. Right, can you see? So the lower we go, the more you would appreciate their use, and you see the value they play. Look at this. And see. So that's how we use psychological levels. That's how I identify them. And that's how you too can use them for your advantage. So your lesson right now in this, after this lesson, you're going to pick like 5 pairs, and you're gonna be picking like 5 pairs. Identify the support and resistance. So these are my refined levels, those little ones I told you about. So these are the institutional round numbers. So I showed you guys real examples. So in my next video, I'm going to be showing you how to combine everything and take a trade from there, and how to manage your trade. So congratulations if you reach this point of the video. You've gotten one of the main juice of the video. If you are wise, you will use it well. And this is trading simplified, like very, very simple. So if you watch any of my videos, I tell you we trade support and resistance. But then there was a type of resistance I told you, but then this one too is this major support and resistance I use here, these prices. So I hope this adds value to someone out there, and you'll be able to do technical analysis and make predictions, speculation, not prediction, in the market. And hopefully you become profitable, make your first profit, and hopefully withdraw it as a result of this session you've taken with me. So stay safe, and see you in class. Remember, your task is to find like 5 to 10 charts, mark these levels and observe how price reacts around them. Practice being able to identify them on any chart because they are there. All you need to find the round number. So I just thought to remind you that again. So see you guys on the next one. Peace.